Welcome back, traders. I'm going to discuss one of the things that changed my trading dramatically, and that is understanding draw of liquidity. Now, I know you may have heard this term before, but I'm going to share with you how I use it to determine where price may be headed. So pay close attention because this can help transform your trading substantially. First, a quick disclaimer, I'm not a financial advisor and nothing I say here is financial advice. Trading is risky. Most people lose all their money they trade with. It's just the way trading is. I'm sharing this just for educational and entertainment purposes only. So let's get into it. There are two types of draws on liquidity for me. I say for me because this is how I use it. You may have seen it differently elsewhere, but this is how I use it and it has helped me tremendously. All right. The first one is fair value gaps, and I have it written on the screen here. The second one is key levels, and that's simply daily highs, 1 hour highs and lows, and using them when there is simply no fair value gaps present. So let me just back up here and show you how simple this is here. All right. So I'm on the NQ and I'm on the 1 hour chart. And I'm going to draw up these bearish fair value gaps, okay? Because you can see how they're often filled or can be used as potential price targets. So this is the first fair value gap here, all right? So if I'm looking for longs down in this area here, I'm looking to target this fair value gap, or I want price to come back up in there. Generally speaking, there is a higher probability that these fair value gaps get filled. Here is another one right here. Here is a few stacked. You can see if I was trading down here in this area, I'm looking for price to come back up and fill this. Now, the key is, obviously, I'm not just going to enter the market blindly down in this area, right? The key is dropping down to lower time frames and looking for a entry model or whatever model you're using to enter the market, right? The trick is we just never know how far price is going to come down before it tries to come back up and fill these fair value gaps. You can see here's another one right here. There is another small one over here. There is another one over here, and I'm just drawing the bearish fair value gaps right now. So you can see that. Again, price is coming down, draws into the fair value gap. Price is coming down up here, draws into the fair value gap. This works over and over. Now, not all the time, obviously, right? But they can be used as potential price targets when trading. So now let me share with you a live example of a trade I actually took in one of my sim funded accounts here. All right, so this is the lower time frame here. And what I'm looking at again is the 1 minute chart. And I entered right here on this particular pullback into the FEG. My stop is right up here around 523, 517. So immediately, if you look at this, pause for a minute, and where might you think price may logically be headed? All right, now first, let me just back up a minute. First, I want to look at this here, and I want to come out to the larger or the higher time frame. I want to come out to the 5 minute chart. And if I'm looking at this here, all right, the first thing I see is this 5 minute fair value gap right here. Okay, so when I'm in this trade, I have to ask myself, where might there be a good place to move my stop to break even or possibly look to take profit? So there's this first 5 minute FEG. Then there is another 5 minute FEG all the way down here. There is one here as well, but that was mitigated this here already. This one was mitigated, so I'm not looking for that one. So I can either A, just take my profit somewhere in this fair value gap, or B, move my stop to break even and then try to target the lower fair value gap here. All right. Now, on the flip side of this, where might price be headed if this decides to move against me? Okay, so looking left here, I'm going to look for another 5 minute fair value gap way over to the left here, or a higher time frame fair value gap. So all the way over here, there's another one just above it. There's a couple here. These are actually stacked, so I'm going to include both of those right here just so we can see this. So given that there's this gigantic 5 minute fair value gap above me, I may want to get out of this trade at break even. And this is really how these fair value gaps help me in terms of using draws on liquidity, because price has a good probability that it may draw all the way up to the top of this 5 minute fair value gap. It's already mitigated this here. So chances are, from a probability standpoint, I don't think this is going to come down just yet all the way down here. I could be wrong, but at the same time, I need to be aware of this possible draw area up here where price may continue charging higher. So what do we do when there are no fair value gaps around then? Well, if I remove all my drawings here, what I want to do is come out to the 1 hour time frame and simply look for highs and lows. This is just using your eyes. You're looking for these immediate highs and lows where it really makes sense. So I'm drawing this here. I'm drawing these highs and lows in the 1 hour. I'm looking left. There's a nice high right here. Okay, and all the way down here, going down to the bottom on the 1 hour, I'm looking at this. So this is what the 1 hour looks like to me. So now I can use these as levels or potential draws on liquidity or areas where price might sweep the market and then look for a reversal. For example, price might come up here and try to sweep this area and then come down to the next area, and vice versa. Price may come down here, try to sweep this, maybe try to mitigate these fair value gaps here and then come back up. Okay, come all the way back up to this target here. So coupling these two concepts, levels, 1 hour levels, daily levels, whatever the case may be, along with fair value gaps or using fair value gaps as draws on liquidity, has helped me better manage my trades, and it has helped me tremendously overall in becoming a consistent trader, meaning it gives me a better idea of where price may potentially be headed. All right, now for a simple little practice here. Let's just assume that you're trading and you're watching the market right now and it is playing out bar by bar on the 5-minute chart. You're watching this market just sell off here. This happens a lot recently, it seems like. Where's the draw on liquidity? Immediately, what are you looking for? Where do you think price is headed? And then where do you think it may reverse? Okay, I'm going to give you just a minute to study this chart. I want you to identify where price is currently headed or where you think it's going to go, and where there might be some kind of reaction, and when and if there is a reaction, where is price potentially headed? Let's play it bar by bar. I'm looking at this. This draws my attention immediately. All right. Is price headed to those lows? All right. If that's the draw on liquidity, do I want to be trying to get into this market right here? All right. Probably not, right? Let's see what happens. So here it goes. Price is coming down. All right. It doesn't quite get to that liquidity, so I'm not having any kind of reaction here. I'm just waiting. All right. It comes down a little further. It almost gets this level. Now, this is tricky. When price gets down here, price tends to gravitate towards these lows. Maybe this low gets taken, maybe it doesn't. So maybe now in this example, you are looking to potentially become interested in a trade here. If so, where do you think price is going to draw to? Well, we didn't quite get these lows yet. So maybe it comes a little further down here, right? Grabs that low. And if it does, where's the target? So let's take a look here. So it comes down, it sweeps that low, goes a little lower. So maybe I'm looking for a long setup right here, or I drop down to the lower time frames. I have a confirmation where we think price is going. Well, it's pretty obvious right here, right? We have all of these fair value gaps stacked up here. Now, which price point or which one of these was a small one right here that was mitigated? All right. Which one of these may I want to move my stop to break even? So if I play this forward, okay, price is drawing up. This one right here looks pretty obvious to me. So I'll just draw a line right here in this area. Maybe if price gets this high, I want to move my stop to break even. If we get up there, let's see. We're there. Stops at break even. All right, next draw on liquidity. We are right here in this area. Maybe I want to take some off. Maybe I take off half my position. Maybe I take all my position, right? Where's the next draw after that? Now this is getting a little risky here if we're trying to get all of these fair value gaps here. So let's just see what happens. I'll play the rest of this out, and it does. It gets all of them. So this is how I use draws on liquidity, along with using the levels for draws on liquidity, as you can see here, where price was swept. Once again, hope you enjoyed this video. Hop into my free Telegram group. Feel free to comment, ask questions. I'll be more than happy to answer. Thanks for watching.